The topic today that I want to discuss is should you buy this attractive bank stock? What I'm talking about is Bank of America. So, this is a bank that's now trading at $23. It has a potential, I believe, to reach $40 over the next 2, 3, 4, 5 years. And I'll give you my analysis for that. So, let me take my presentation here. All right, so first is a little bit of the background. So BAC is the second largest bank in USA with assets of more than $2.4 trillion. As you can see, it's just behind JP Morgan Chase. So deposits of 1.4, total assets of 2.4 trillion. The current market cap is 200 billion, meaning how much it is worth, which is second largest bank after JP Morgan Chase. Net income of $27.4 billion. It serves 66 million consumers, more than 4,300 branches, 16,800 ATMs, owns financial advisory Merrill Lynch. Now, one of the most important things that I look for in a company is its competitive edge. Do they have a competitive edge over its competitors? So if you let's look at some of the advantages this bank has over its peers. So one is, as I mentioned earlier, it's the second largest bank, meaning its scale is huge. Assets of $2.6 trillion, meaning out of that loans exceed more than $1 trillion, as you can see here. Meaning these are assets that generate income for the bank. Larger the loan, larger the income, assuming that these loans don't default. And here are some of the facts and figures, kind of a snapshot of the bank. As you can see, its book value is $27 and it's trading below its book value, which is huge. Now, it has a large scale operation. Another advantage is this one: 66 million customers, 38 million digital customers, 4,300 bank branches, 2,500 banking professionals. Has banking relationship with more than 95% of the Fortune 500 companies. It has operates in more than 40 states. Also, if you look at the financial, it has generated consistent revenue and net income growth. Here are the figures. Another important thing is it's deemed to be a systematically important bank, meaning Federal Reserve has uh, gives a few banks a criteria that they are systematically important, meaning that their failure can cause havoc in the financial market. So this, I believe, in turn is an advantage because if something happens to the economy, severe recession, Bank of America will be helped by Fed and the U.S. government. And another is it has a tier one capital, which is an important ratio that all banks need to maintain, and it's above the required rate. Also, every year the Federal Reserve conducts a stress test, meaning what will happen to the bank's loan portfolio if the housing prices contract by 27%, jobless claims go up, things like that, and they pass that. And see below this, if you click on this link, you'll see more details. Next is their revenue is diversified, meaning its revenue is from multiple sources. As you can see here, there's consumer banking, global wealth management, global banking, global markets, and all other services. Also, this is a very important point here is that its income is generated both interest income and non-interest income is 50% split. Meaning interest income is whatever interest that they get from loans and whatever loans. And then the non-interest income is non-loan related income. So this is very important. Not everything that they generate in profit is based on the loan. So they do a lot of other services for clients. It could be in a mortgage origination, or it could be in equity investments or advisory service, etc. Next is any bank. One of the most important thing is you have to look at their loan portfolio. Is it comprised of just businesses? Is it comprised of just residential mortgages? And as you can see here, it's a good split. They pretty much lend to all sectors. They are tied to the economic growth. Also, it's split between residential mortgage, credit cards, commercial real estate, etc. Another is what are their achievements. The bank has achieved a significant amount of achievements here. One is, as you can see, number one in consumer deposit market share, number one in small business lender, home equity origination, and also they have a pretty good international operation. As you can see, Asia in Asia, they produce about 3.4 billion, and then Europe 5.3, Latin America 1.2, etc. So I expect this to grow in the future. Now, this is a slide showing BAC's transformation over a decade, and this I got from their investor presentation and annual report. So as you can see, they've strengthened their capital, liquidity is stronger. This is obviously after the 2008 crisis. So this bank is in a better shape than what it was prior to the 2008 crisis. Now, let's come to the valuation. So any bank, one of the most important thing is, how is it valued right now and what are its future valuation? So currently it's trading at 9.4 times this year's earnings, which was about $27.4 billion, or it's trading at price to book of 1.4. Book value is asset minus liability. The stock has corrected from $35 to $23, mainly due to concerns over loan deferment due to COVID crisis. So right now, I believe this is a good bank to start accumulating, and if you can buy more as it comes down, if it comes down. Now let's look at the future valuation. So, assuming the bank can grow about 20% over the next 2 to 3 years, which I think is very realistic. Now, how can they do this? One is expanding their loan interest income, increasing global wealth management, Merrill Lynch, and investment banking activity. Next is increasing transaction, other fee revenue, and increasing international revenue. So, a bank with this scale can do this, in my opinion. And next is, how do we arrive at this $40 price target? So last year EPS was 2.75 or 27.5 billion. Now if they grow at 20%, their EPS will be around 3.3, which I think is very realistic. So I'm talking about 20% growth over the next 2, 3, 4 years, meaning less than 6, 7% per year. All companies trade at a multiple, and if we apply a similar multiple of 12, let's say, we get 40.8. So that's how you come to that conclusion. Now, every bank has, every investment has a risk, and one must also really need to understand this. And let me go over this. One is, I'm assuming the COVID situation doesn't get out of hand, meaning loan deferments or loan defaults will decline. Another assumption is U.S. economy not entering a recession. If a recession happens, then the bank will suffer from loan losses. The other important point here is banks set aside 4.6 billion in the last quarter because of the huge surge in COVID deferment, not expecting such a credit provision in the future. So they will set aside money, but it'll be less. During the 2008 recession, the stock went below $10. There's an extreme situation, and if this happens, it can go down, but I'm not expecting this scenario. Overall, assuming a normal situation, the bank has the scale to achieve earnings growth of 20%, and in turn, achieve more profit and ultimately higher share price. Thank you. If you like this video, give me a thumbs up. Thank you.